In a bid to cushion the impact of rising living costs, Turkey's labor minister, Vedat Istikhan, announced a significant minimum wage hike. The monthly net minimum salary will jump by 49%, reaching 17,002 liras, a move aimed at fulfilling a promise to shield workers from the crushing effects of inflation. Minister Istikhan quoted as saying, "We fulfilled our promise not to allow our workers to be crushed by inflation." However, the decision has put Turkey under the watchful eyes of credit rating companies and investors, with Wall Street giants such as Goldman Sachs and Morgan Stanley sounding a note of caution, suggesting that a minimum wage adjustment exceeding 40% could complicate the Turkish central bank's efforts to rein in extreme inflation. With Turkey's inflation on track to surpass 70%, the government faces a delicate task of balancing the needs of its workforce against the necessity of curbing out-of-control inflation. While minimum wage adjustments may provide short-term relief, a long-term strategy addressing housing affordability, fiscal responsibilities, and sustainable economic growth is crucial. So, how does the government navigate the challenge of easing the cost of living crisis while avoiding disruptions to their broader effort to slash inflation by nearly half by the end of next year? Well, to start, Turkish economic challenges extend well beyond the 49% wage hike. Turkey is grappling with a housing crisis, making it increasingly difficult for the average citizen to find suitable housing. Despite a marginal decline in housing costs, high inflation in the construction industry and rapidly declining purchasing power of the Turkish lira continue to make it difficult for the average income earners to find suitable housing. According to a recent report, Turkey tops the charts in the OECD for both rent and housing prices. In June 2022, the government introduced a 25% cap on rent hikes, but as annual inflation surged over 85%, landlords began demanding exorbitant rents, leaving many struggling to make ends meet. In a surprising twist, the head of Turkey's central bank, Hafiz Gaye Erkan, revealed her struggle to find affordable housing in Istanbul. Despite her high position, she moved in with her mother, shedding light on the stark reality of the housing market's challenges. President Erdogan, once a champion of cheap money, has shifted gears, focusing on cooling off domestic demand. The central bank, in response, has sharply raised interest rates to counter the inflationary tide. Turkey's central bank has been on a roller coaster of policy changes. But first, before I get started, if you haven't already subscribed to this channel, then do it. I have a lot more content coming out, and while you are at it, drop a like on this video. I would really appreciate it. Despite recent interest rate hikes, there's uncertainty about the effectiveness of these measures in tackling the country's inflation, which peaked at 85.5% in October. In a move that surprised few, Turkey's central bank raised its key interest rate by 250 basis points to a staggering 42.5%. This aggressive tightening cycle, aimed at tackling years of soaring inflation, has been a consistent theme in recent months. Analysts anticipated the move, predicting one more rate hike after 7 consecutive months of tightening. Since June, the central bank, under the leadership of Hafiz Guy Erkan, a former Wall Street banker, has lifted its 1-week repo rate by a whopping 3,400 basis points. Despite Erdogan's past insistence on cutting rates, Erkan's leadership has instilled confidence, evident in the dip of Turkey's credit default swaps. However, skeptics question whether the central bank can stay the course, considering Erdogan's history of firing central bank chiefs and the love for cheap money. As we witness this policy U-turn designed to address chronic trade deficits and attract foreign investors, the impact is already felt by Turkish citizens. High borrowing costs make it challenging for them to manage the debt accumulation during the cost of living crisis of the last 2 years. Many Turks are in a debt-death spiral, issuing new interest-bearing debt just to pay off existing interest. As Turkey grapples with a multifaceted economic crisis, the road ahead remains uncertain. The minimum wage hike, housing challenges, and the inflation battle paint a complex picture of a nation striving to find stability amidst economic turbulence. If you found this video informative, like, share, and subscribe for more deep dives into the global economic system.